Greeting to you, day traders, and you're watching the Daily Market Review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated, as traditional, to the technical analysis of Forex majors. And let's start our review from the first pair. It will be intraday analysis of Euro and US dollar. So, the setback from Monday's 1.2625 high brings last Friday's low at 1.2495 back into focus. The main threat is for a trend extension into fresh 10-month lows below 1.2495 towards the long-term wave equality target at 1.2452, and scope would also be created for 1.2295. A recovery above 1.2575 is required to defer the euro bearish outlook, opening 1.2625 and 1.2688. However, single print resistance at 1.2711 from last week's market profile forms a formidable ceiling. Weekly chart of Euro and US dollar trend is bearish. Next pair, intraday analysis of US dollar and Japanese yen. Let's see what we have here. Tuesday's Asian session setback of 79.64 puts support at 79.33 at risk. Action remains choppy within a short-term lateral consolidation phase between 79.21 and 80.14. And the three-pronged bull divergence on the daily slow stochastic indicator is a warning that the previous 10-week downtrend is running on the stream. The May 18 reaction low at 79 would be bolstered by recovery through last week Friday's high at 79.82, paving the way for further gains to 80.14 and 80.56. Weekly chart of US dollar and Japanese yen trend is bearish. Next pair, intraday analysis of Great Britain pound and US dollar. So, a downtrend extension to 1.5599 is still the main threat, as resistance at 1.5745 continues to cap corrective Great Britain pound gains. Last Friday's low at 1.5630 remains vulnerable, and Great Britain pound bears have the 1.55 area in their sights on concerted weakness. A push above 1.5745 would provide respite, but only above last week's high at 1.5848 would leave the tone. Weekly chart of Great Britain pound and US dollar trend is bearish. Next pair will be analysis of US dollar and Swiss franc. The focus is back on last Friday's 15-month high at 0.9612, and the push higher is anticipated. 1.618 Fibonacci extension target at 0.9696 would be targeted on a sustained break, although additional upside scope to the February 1211 orthodox lower high at 0.9776 would also be created. Corrective weakness is limited to the 0.9525 support area, and only below 0.9525 would expand the move towards 0.9450. Weekly chart of US dollar and Swiss franc trend is bullish. Next pair will be intraday analysis of Australian dollar and US dollar, and it will be the last analysis for today. Let's see. The corrective recovery remains on course for an extension to the May 2022 lower high at 0.9937 and 0.9950 area. However, a fresh wave of Australian dollar bull pressure would be required to force a break through 0.9950 towards the 1.0012. In order to bolster last week's 6-month low at 0.9690, A setback below Tuesday session low at 0.9802 would suggest the corrective rally has peaked, exposing the 0.9746 higher low and the last week's low at 0.9690. Weekly chart of Australian dollar and US dollar trend is bearish. And that's all for today, my dear traders. It was me with you, financial analyst of Grand Capital Company, Sergey Lin. For more additional information, analytic information, visit our website. It's www.grandcapital.net. And I wish you the fair trends and good luck and goodbye.